Buddy, just wait for a few people to hop on. David, we are live.
Hey, Stacey, how are you?
Yeah, good, thank you. Good, thank you.
Excellent.
If we give it a couple of minutes, we'll just have a bit of a chat while we wait for people to hop on. But in the meantime, I'm Stacey from Positive Property, and we help people reach financial freedom through property investing using the McCloskey method. And tonight we have part of our circle of safety on, and we have David from Tactical Brokers. Welcome, David.
Awesome. Nice to be back again, Stacey.
Nice to be back again. You've been on before. You're just here for another round.
Exactly right. Yeah, put myself back on the spotlight and hope to help some people out tonight and throughout the journey.
That's it. Anyone who has finance questions, get them in early because we might not get through all of them. So any questions in relation to finance, but we are going to go through a few things tonight. And David, I'll hand it over to you to start off and start getting people into, how do they go about getting in contact with you? What's the process?
Yeah, fantastic. Thanks, Stacey. And first of all, for everyone watching, apologies for the photo that was put up for me tonight. It was a wedding photo. I've got my sunnies on. It's not my normal persona, so this is me. So apologies for that. But look, we've got what we call a 7 steps to financial success process within our finance journey, and everyone that comes through the program goes through the exact same process. So basically the steps are that someone books in with us through our calendar link, and what we call that is a triage process. So we liken it to a speed date, so to speak, where we work together and see if what we offer is what people are looking for in terms of finance. We work out where they're at currently from their financial position, and see where we can potentially help them along their financial journey. So once we've gone through that step, we'll get people set up in what we call our finance vault. And this is a really cool piece of software where clients can go in, they can upload pay slips, bank statements, financials, fact find, all the things that we need to do from a loan application process.
We did all that.
Exactly right. So it's very detailed, and there's often a lot of information there, but it's really vital to get all of that to make sure we can process everything for you and put together the best possible package from a finance perspective.
Yeah, making sure you're actively doing what you're asked.
Yeah, exactly right. Exactly right. And look, once we've got all that, our team, that's when the magic happens for us. All of our team go away, our para brokers, our support staff, start doing research and servicing across a range of different lenders that we have access to, and start pulling together a strategy for you guys as clients. So that's the most important aspect of what we do. And in particular for people looking to build investment property portfolios, the right structure, as I've said before, is the most important thing moving forward.
Yeah, definitely. So that just helps you to be able to keep moving forward with your goals if it's set up right from the start. Isn't that correct?
Yeah, exactly right. Because at the end of the day, people wanting to build multiple property portfolios, it's important to have equity, it's important to have cash, it's important to have the right structure and the right access to different lenders along the journey. Because, no matter how much money you earn or what you do from an income perspective, we do need it sometimes to go to a range of different banks and lenders to keep building that property portfolio. So that's that. And then basically once we've got that, we reconnect with you guys through our strategy session. And that's where we present the opportunities for finance and a path forward to be able to, get into your next investment property or your first investment property. And then once we've gotten through that strategy and we're all on the same page, we go back to the team and the team lodges it all for finance approval. And pending everything being, provided to the bank, we get our approvals through and through to settlement. So it's a 7-step process. It often takes somewhere between 4 and 6 weeks, sometimes longer, depending on lenders. But generally speaking, it's a fairly smooth process.
Part of our heart acronym is the radical responsibility, and that is very much where you come in, David. We have to make sure that us as members or clients of yours are taking radical responsibility and filling in our own side of things, getting that paperwork in as quickly as we possibly can. I know every time I got a message, I was like, quick, got to get this done now.
Correct. No, exactly right. And of course, the right level of information too, because if we don't have everything that we need to be able to provide to a bank or a lender, it just adds more time in the background and it drags out the process. So, we like to hold ourselves accountable to timelines. And so we like our clients to be able to do the same thing. And it just fast tracks everything from a nice, smooth and happy process for everyone.
Exactly. So, and there's so much to do. So you're better off to get it done like as soon as it comes in, because this might take you a whole day to get all of that information through and in. And if
Yes.
that means that you're going to be able to get a property opposed to not get a property just because you're putting in an extra hour of work, you're definitely worth doing, right?
100%. And the best part about it as well is we have some really sophisticated client software systems that we operate. So once we've got all the information in there, when you come back to us for property number 2 or property number 3, we've got 90% of the data already. And it means that we can really fast track your applications the second and third time around.
So you're telling me I don't have to hand in all that same stuff again?
Correct.
That's
We've got
awesome
it all
news.
sorted. Exactly right. Brilliant. Yeah.
The less is better.
Exactly right. So
yeah, okay. So we did have a few questions come in too, David.
great.
I know through the week on our pages. So I just wanted to go through a few of them with you, if that's okay.
Sure.
Yep. So house and land versus townhouse.
Yes.
Yeah. How does that side of things work in terms of finance?
Yeah, big difference. So basically, when you buy either a completed property or an off-the-plan townhouse, for example, it's always going to be a one-part contract. So what that means is when you sign your contract, you would go unconditional once the finance has been approved, and you pay a 10% deposit at that point in time. Then the property goes away and gets built, and you don't need to pay anything further until the property is due for settlement. And that may be 6 months away, it may be 2 months away, it might be 12 months away, depending on the property.
So you only have to pay down the deposit, and then that's it.
Just the 10% deposit at that point, and then the rest of your deposit if you are putting in more at settlement, plus your stamp duty and other fees and charges at that point in time. The difference with obviously a house and land or a construction is that the contract is split into 2 parts. So you'll have a land part and you'll have a build or a construction part. So what normally happens is the land will get titled by the government, and at that stage, we'll need to settle on the land price of your total package at that point. So you'd put in your 10 or 20% deposit at that stage, and you'd start making loan repayments on the land from day one. Then once your property is ready to build, that's when the builders start going through and the progress payments start to come through from builders to be paid by the bank as the build progresses.
Okay.
Yes.
I have heard of that happening. Well, I've been through that process myself, but I have
Yes.
heard of that happening. I know my brother went through that exact same thing as well.
Yeah, exactly right. So it's obviously a longer process, and obviously what happens that a lot of people don't realize is the bank, the builder will start sending you through invoices to pay. Don't worry, you don't have to pay it out of your own pocket. We send that through to the bank, and the bank pays the builder directly to ensure that the build is progressing to a standard that they're acceptable and happy with.
Oh, good. So there's a reason that it happens that way then.
Correct. Exactly right. So especially with the first and last progress payments, because they're the most important ones in the journey. So the last progress payment is the lockup stage, where the builder says the house is ready. It's your time to take the keys and get your tenant in there. You want to make sure that the builder has done everything that they have agreed to do within that contract.
Does anyone have questions in regards to that side of things? If you do, just feel free to pop them in the chat, and we'll discuss them here in the group. Otherwise, we'll just keep going with a couple more questions that we've had come through the week. So I had Nigel ask a question in our Facebook group, and he said that it would be great to understand if it is possible to get a construction loan without having a fixed price contract.
Yeah, it's a good question. It is possible to get a loan without a fixed price contract, but it's very difficult to obtain additional finance if the price of the build changes over time. So the whole concept of a fixed price contract is to make sure that the bank has adequate coverage, and they know that you can complete the build with the amount of money that the bank can lend you. If suddenly, that contract changes and you need to put in another $10,000 or $20,000, if you don't have that already approved in finance, you'd have to go back and get, either reapproval for more money, or you'd have to come up with that extra money in cash. So it can be done, but it's a difficult process, and most banks prefer a fixed price contract to be able to facilitate a loan.
Okay, perfect. I've got a big, long question here. Look at this, Dave. It takes over our whole faces.
Yes.
Okay, if I open a company with houses that are fully paid, the rental income. Okay, this is the question that I had to go back in and find. Thanks for putting this up. Yeah, the rental income give back to me the salary, then I max out my borrowing capacity. Then when the company have enough income, it just get another loan under the company name. Does this work? Does that make sense?
It's a very complicated question.
That is a complicated question.
And obviously a range of, it's probably not something I could probably answer tonight without a bunch more information about that type of structure, because
we need them to book an appointment with you.
100%.
I'm pretty sure this person is part of our group. So if you could just jump on tonight, actually in the SHERP, and we might get you to book an appointment with David.
Good idea.
Yeah, sounds like a big long one. So
we could be here for hours talking about that one if we need to. So we'll pencil that private chat.
That's all right. Hopefully I can get him to come through and ask you directly. So that might be a conversation for one-on-one. Now, that was Tony, I believe, that asked that question. So thanks for that, Tony. All right. So how come some people get knocked back from finance from a broker and then they'll go to another broker and you don't get knocked back?
Yeah, it's an interesting question, and sometimes there could be a good answer to that and a bad answer to that. So, sometimes you get knocked back by a broker because they don't have access to the right range of products to support your needs. Some brokers might only have accreditations with 5 or 10 banks. Others have got accreditations with 50 banks. So it's about understanding where you can fit a particular client based on their circumstances. And to be honest, I think a lot of it comes down to experience and understanding bank policy and knowing what's going to fit with which particular bank or lender. So, we've had quite a few examples of clients that have come through where they weren't able to obtain finance with a particular bank or broker, and we've been able to support them to get them into a loan with a range of different options. So I think from my perspective, I think it's about understanding your client. It's about being thorough with the details. And it's also about looking for opportunities within people's financial situation to make things work. So, we might
sometimes there might be a missed opportunity by one broker that another one sees. It's sort of like a puzzle, right?
Yeah, correct. And especially when you've got multiple investment properties or even one investment property, splitting up the finance and taking it to different banks and lenders can, facilitate you to borrow more money. That's the other thing. Like, every bank is different in the way in which they assess your ability to borrow money. And some of the variances can be up to 20 or 30 or 40% difference in borrowing capacity. So,
So do you have direct links do all brokers have direct links with banks, or you have just a broad spectrum of many different types of banks?
Yeah, I mean, I'd say 99% of brokers would obviously have access to main bank lenders like Commonwealth Bank and the Big Four, etc., plus a range of non-bank lenders. There are some specialty products, I suppose, or off-panel products, as we call them, that not everyone has accreditations with. And some of those lenders obviously provide, a range of different services or alternative loans to support people with different financial situations. So that's one aspect of it. And the other aspect is us as brokers, we all utilize what we call aggregation systems. So that's not all banks and lenders are on everyone's panel. And so sometimes if someone can't help you, that might be because they don't have access to a particular bank or lender that we do. So
okay, right. Yeah. So different brokers have access to different banks.
Yeah, correct.
Okay, there you go. I just noticed that I missed half of that question before, David. I know it was an extensive question. And Scott, there's more. Can you see that? Can you see the information on the rest of that question or not?
Is that the one where if I put in?
Yeah. So he's talking about my farm fully paid, give me $600 per week. I have fully paid. So this is more individual. So it still needs a one-on-one session, doesn't it?
Yeah. There's the last point that makes the thing about debt to income ratio, which is an important aspect of finance at the moment. So there are some banks and lenders in there that impose a strict limit of debt to income ratio of 6. It looks like Tony's asking about, is that an opportunity to increase that debt to income ratio? Yes, it is. There are a range of other different lenders that don't adopt the debt to income ratio, strict rules. And we can obviously talk about that with Tony.
Okay, perfect. All right, so we've got another one come through here. Okay. Are the interest rates actually going to increase? And what are our thoughts on when? What are your
Yeah.
thoughts?
Yeah, good question. I mean, what we've certainly seen in the last 3 months is that fixed rates have gone through the roof. We were seeing 1.89% fixed rates in sort of October, November last year. Those rates now are comparable in the mid to high twos. So, the banks are already starting to factor in interest rate rises over the next 1 to 2 years. I personally think that we're probably looking around August or September at the earliest with a raise in the variable rates, and then probably 1 to 2 more in the next 12 to 18 months.
Yeah.
Yeah.
Okay.
Yeah.
Perfect. So
Crystal
does it
ball.
matter in terms of would you recommend fixed, variable, or everyone's case is completely different?
Yeah, everyone's case is definitely 100% different. I think in terms of, when you're looking at investment property strategy and, positive capital cash flow, I think it's important to keep things variable and interest only to take advantage of offset accounts. And I know that's certainly a strong message that you guys talk to your clients about as well. So
Definitely, yes. Yeah.
yeah, but definitely horses for courses.
Here we go. And what would an 1% increase mean to the average loan?
Suppose it depends on what you classify as the average loan in today's market. I mean, they
So
say,
let's say 450. Let's just
yeah, yeah. So I mean, normally they'll say 300 or $350,000 loan. A quarter of a percent interest rate rise is around $60 a month. So you do that by 4 times, it's probably around $250 to $300 a month for a 1% rise.
Okay, there you go. There you go. So we want to make sure that we're, I guess, definitely getting the right property so that we
Yeah, exactly right. Exactly right. And obviously, it depends again whether or not it's an owner occupied loan or an investment loan. That definitely determines the strategy around repayments and whether or not it's fixed and variable.
Yeah, of course. All right. So in terms of okay, there's a few more questions coming yet. Hang on, I'll get to these ones.
Yes.
All right. So from the group, okay, I've heard brokers giving advice, good and bad, yet they don't even own properties. How do you qualify the good, the bad, and the ugly, lol, in terms of, I guess, brokers who invest in property?
Look, I mean, obviously, we talk to your clients about investing in property. I'm an active property investor. I've had
Yep.
multiple investment properties in the past. I hold property now. I love going to opens on a weekend. I'll help friends out because that's what I love to do is talking property, and I'm
It's your
passionate
passion.
about it. I think it just because you don't own property doesn't mean you don't know how to structure a loan. That's certainly not the case. But certainly, I think it helps in terms of having an understanding around repayments, what you should be looking for in finance, and how to get ahead with your investment properties. I think that's something that we personally bring to the table as an added benefit for clients.
Definitely. And also, I guess that trust side coming from the member side or from the client side, that they
Yeah.
trust someone that actually has actively invested in property because they have more of an understanding
Yeah.
about the whole process because they've been through it themselves.
Correct. And look, I've got a self-managed super fund as well that I created many years ago. So I understand that process and what it takes to get a property within a self-managed super fund. So I
Oh,
firmly believe in sort of walking the talk. In what we do.
yeah, exactly. Yeah, the self-managed super fund's been through that process. It's
Yeah.
lots of paperwork, but so
Correct.
worth it in the end.
Exactly right.
So worth it in the end. All right. So obviously it's important to go through finance through a broker rather than going directly through the bank.
Yes, 100%. I mean, the biggest thing at the moment, and it got introduced at the 1st of January, this year, is what's called best interest duty. And so as brokers, we have an obligation to make sure that we find a loan that is in your best interest for your circumstances. That's something that is specific to mortgage brokers and that banks don't have to follow. So I think that's just a real key differentiation between banks and brokers, where banks will only ever sell their products, whereas we as brokers have access to a range of different products to support your needs and your best interests. So, you don't really need to go any further than that to see the difference between a bank and a broker.
Yeah, exactly. You're only going to get one option usually when you go to the bank, right? You're not going
Exactly
to
right.
get so many as you can from a broker. How does a broker get paid? Here we go.
Yeah,
Facebook user.
Good question. We get paid in two different ways. So when we introduce a loan to a bank or a lender, we get paid an upfront percentage of the loan amount. And then we also get paid what's called a trail payment. So the trail is a small ongoing payment while we are managing the loan on your behalf. And it gives us the opportunity to go back to the bank, talk to them about your existing product or your interest rate, continue to work with you, negotiate with you, and make sure that you're always on the best deal.
That's good, because most people aren't actively watching their own properties after they've got them.
Correct. Exactly
That's
right.
it. They're just worried about getting them.
Yes, exactly. And one of the things around what we do as well is we obviously have a really good CRM system, which I mentioned before, which has trigger points. So things like 1-year anniversaries, fixed rate expiries, interest only expiries, all these sorts of things, that allow us to have touch points with clients and make sure that we're reviewing their loans on a regular basis.
Yeah, of course. All right. So what's a trailer? They just heard you talk about
that. So trail is essentially an ongoing payment while the loan sits under our book as a mortgage broker. So essentially, as I said, it's a small ongoing amount that the bank pays us out of their profits.
Yep. Perfect. Yeah. Okay, there you go. That's what a trailer is.
Yeah. The most important thing to note about the commission structure or payment structure for a broker is that it doesn't impact what you receive as a client in terms of your interest rate or anything to do with your loan. So the bank recognizes that we're bringing the business to them. They're not having to do anything for that. We're doing all the work. So they pay us, a fee for doing so.
Yeah. Yeah. Okay, there you go. Perfect. So in terms of my own personal experience, obviously I've been through David ourselves. We've met in person.
We have.
We have. So the process from start to finish for us was pretty smooth, really. It's just a nice appointment to start with, get all your information in there. Every time they request something, just make sure that you log it in and away you go. They all pretty much do it all for you. They do the hard work. I had David sweating a few times there.
Yep. No, it was a good one. But
making them work a bit of overtime.
No, it was good.
I didn't do it on purpose.
Well, yours was a super fun deal, Stacey. So
a lot more complicated.
A lot of paperwork.
A lot of paperwork, exactly.
Yeah.
The other ones are not as complicated as those ones. But look, you'll have quite a few people going through those at the moment, don't you?
Correct, 100%. Yes.
Yeah. So he does everything. So that's the whole process in terms of your 7 steps to from when they first meet you to when they go through. So first, if they're coming through Positive Property,
yes,
they would go through myself. They would go through to a strategy session. After the strategy session, we would basically get their details, send them through to you for an appointment.
Correct, exactly right. And so we've got our Calendly booking system. So basically people book directly in with us and we can obviously start the process from there and really get to know and understand everyone's circumstances personally and put together that strategy for them moving forward.
Perfect. Yeah, it's nice and easy. Just a link directly to your calendar, so you can pick a time that suits you as well.
Exactly right.
Yeah. Okay. Perfect. Cool. So in terms of off the plan and townhouses, we've sort of covered that line of things. Yeah. Now, do you deal in just mostly in properties, or you do other things as well? So if people come to you with property finance and then they wanted you to do other things as well, would you take on board those as well?
Sure. Obviously we focus traditionally on, residential investment for our clients. We do things like commercial asset finance as well. So for business owners looking to lease vehicles or equipment, we've definitely got experience in that. Probably not me specifically that would be handling that. We've got other members of our team that would look at those things. Car finance. Had someone come to me about wanting to finance a tanning booth for a salon. We do a range of, we get some funny requests. So we do a range of different things financially. Obviously, home loans and investment loans and commercial loans are the main ones, and a little bit of asset finance along the way. Obviously the super funds loans as well that we do, and a little bit of business loans as well. But traditionally what we like to do with those is we would refer them to people that we know within banks, like a direct business banker or contact as well.
Yeah. Okay. Perfect. All right, here we've got for a newbie into property, what's the first thing you can recommend to prepare to get started?
Yeah,
Oh,
great question. Great question. I guess the first two things that you really need to understand is one, how am I actually going to get into my first investment property? Do I have enough? Do I have enough cash? Do I have enough savings to be able to buy a property, or do I have enough equity in my existing house to be able to support that? Number two, how much can I borrow? That's the most important thing. Based on your income, based on your other financial situation, how much is a bank or other lender going to lend you to be able to support that property journey? Once we've got those two key things, we can start to develop a strategy and personalize that to your other circumstances. But yeah, income, understanding the income, the borrowing capacity, and how you're actually going to put your deposit forward for that property.
what if, and I know I had one of these questions recently, David. I had someone ask me, so they're not working at the moment, sort of that semi-retired stage, but they're getting a lot of income through existing properties.
Yep.
Are you still able to get a loan in this case?
Yeah, it's probably a little bit more limited than what you would be with a standard income, and the reason for that is obviously rental income is probably seen as a little bit more risky than your standard, wage or salaried income. So there are banks and lenders out there that will purely accept rental income as
As an
a
income.
main source of income, but they'll generally sort of shave it down a fair bit in terms of what they'll count to see if you can still support the mortgage if one or two of your rental properties were vacant for 4 or 5 weeks.
So if the more you have, the better it gets, right?
Yeah, correct. Yes, correct. The main thing though is, of course, you still have, even though you're retired, you still have living expenses and you still have potentially other debts that the bank wants to take into consideration. So that's where people become unstuck, where if they're retired and they're not earning any income, the living expenses from a bank perspective don't change. You still have to allocate things for
Still have
food
to
and rent and
allocate.
all that sort of stuff. Yeah.
Yep. And even if you're not retired and you're just you've just got that income coming from other sources, but it's not directly from a wage.
Yes.
You also deal a lot in sole traders and all that side of things as well, and you're able to get them loans where they haven't previously been able to get them.
Yes, correct. Look, it's a really interesting environment for self-employed because there's a wide range of different options. So those people that can't provide the standard 2 years worth of financials, there are other alternatives out there that can still support a loan. So banks will accept things like BAS statements or a declaration from the borrower about what they're earning, in conjunction with something from an accountant. So there's a real wide range of ways that we can secure finance. The most important thing, of course, is to make sure that anytime you're applying for finance, be it full doc or low doc or whatever path we take, that it's affordable in your own eyes as well, and you're making sure that what you're putting down in terms of income is consistent with what your business is bringing in. That's the most important thing.
Okay, perfect. Because we do have quite a few
Yep.
business owners coming through
Yep.
that haven't been able to get them previously, and you've been able to work your magic.
Yeah, and sometimes businesses will have a really significant growth period over a 6 or 12 month period, and that's not reflected in their previous financials. And that's what low doc is about. Sometimes it's about saying, well, I haven't got my financials in place yet because they're not due for another 12 months, but I know that my figures can support what we're earning from an income perspective.
Yeah. Okay. Perfect.
Yeah.
So we've got one question here. What's the borrowing capacity to income rule of thumb?
Sure. So that's often called like the debt to income ratio. So often we look at that and say that banks will say it's 6 times your income would generally be a maximum amount that you'd be able to borrow. But it's not a hard and fast rule because there's a wide range of other things that come into play. So your access to other debt like credit cards, personal loans, if you've got any rental income coming through, if you've got any Centrelink, all these sorts of things play a part. But the general rule could be 5.5 to 6 times your income.
Okay, perfect. General rule 5.5 to 6 times
Yeah.
your income. That's awesome. That's all the questions we have so far. Does anyone else have any more questions to ask? Because we'll only be on here for another 10 minutes, I believe, David, and then we're off to do our next shirt with our members.
Looking forward to that as well. Hopefully,
Yeah.
here we go. Got some more.
Okay, here we go. What's the low doc rate difference in / increase?
Yeah, sure. Again, this is it depends on a few other bits and pieces to do with the finance, but traditionally, we are seeing some low docs for owner-occupied loans still in the below 3% range. You might look at some interest only for investment in the mid 3% range compared to the high 2% range for a full doc loan. So it's not a complete. It's not like 2.5% and 5%. The gap is not that significant. But it certainly has to be there because there is an element of risk from the bank that they're lending you money with less information.
Oh, there you go. Okay,
Yes.
perfect. So we do have quite a few people that I guess find it hard to get loans and that at the moment
Yep.
due to being single parents, single income earners, that side of things with dependents. Do you have a rough estimate of what let's set aside a deposit, but what would their income have to at least be?
To be able to secure their first property?
Yep.
Oh, geez, that's a good question. Just because there's so many different variables
There's
and
too many okay, let's just go with
Yeah.
if I was a single mum and I was earning out of two children, let's say earning $80,000 a year and I had a 10% deposit on
Yeah,
basically
sure.
$450,000 house, would I get a loan?
Yeah, I mean the general if you apply those general rules of thumb that we spoke about around a 5.5 to 6 times income ratio, then yeah, it makes sense that you should be able to borrow something around that 4 to 450 mark. But of course, there's a wide range of other things to take into account, as we said.
Of course, I'm just
Do you
going
have?
with basic. I don't have a
Oh, of
car loan
course.
and all that
Yeah,
stuff.
do you have credit cards? Have you got car loans? Do your kids go to private school? Do you have kids with braces that we need to factor in expenses for? There's just so many different items these days that the banks do focus on. So it's really important to, obviously, when we connect with clients, that they do the fact find, get all the information to us so that we can give them that accurate borrowing capacity.
Yeah, and some of them might have a higher deposit, and in that case,
Yep.
it's still okay to go ahead and get the loan. And if you have a lower
Correct.
deposit but a higher income, then it can be
Yep.
okay. If you have
100%.
a low deposit and a low income, then maybe you just need to save a little bit longer.
Exactly right, and that's the other thing. I think that people you don't want to get disheartened if you can't buy a property straight away. Put in a savings plan, put in a plan of attack for the next 6 to 12 months to get you towards that first investment property or your property goals.
Yeah, it takes time, and I suppose it's the people that give up makes the bigger percentage
Yeah,
of
100%.
Australians, right?
That's
It's
it.
a very small percentage at the very top that actually end up living off their property income.
Yeah, exactly right. And it's taking that first step as well, because I think, there's a statistic out there that, 90% of people don't own investment properties, but the 10% that do, 90% of those people have multiple properties. And so it's just getting started in the market to begin with and allowing yourself to grow your wealth that way.
Yeah, exactly. Just get that start, and I guess don't be put off. Just
Yeah.
keep pushing through. So, how do you deal with bankruptcy issues in the past?
Sure. So again, this is a tricky one. We do come across with clients all the time that have got credit issues, be it defaults on a bill that they didn't pay 5 years ago, or extremes like bankruptcy. There are lenders out there that will accept people that have had a bankruptcy issue in the past and they've now been a discharge bankrupt, and they'll lend money on the basis of that. Of course, the bank is taking a risk by accepting someone that was previously bankrupt, and so the interest rates will be higher, and there may be some upfront fees and charges that you would have to pay to be able to get yourself into a loan. But if it's a way to facilitate getting back into the market after a couple of years, if your credit becomes clean again, you can always refinance and get a better deal at that point in time.
Okay, perfect.
Yes.
All right. So there are options out there, and I guess keep pushing through. There's people that get knocked back from finance all the time, every day. So I guess it's those ones that keep coming back that are the most successful.
Correct. And with discharge, with bankruptcy and other credit issues, we have a range of access to lenders who are called non-conforming lenders, so to speak. So they do focus and specialize in this space, and they're more understanding of the narrative behind why people go bankrupt. It's not that you're a bad person. It's just that something might have happened within your business at a point in time. And if you explain the story, they're certainly more receptive to lending money in those situations than your traditional banks.
So they do have a heart.
They do. Yes.
I didn't think they did.
Yeah.
Perfect. So in terms of questions, I think we're about wrapped up on the question side of things, unless anyone else on Facebook wants to know something about finance. Well, here we go. We've got one here. Okay, what if I'm 16 years and mum and dad given a deposit for a property?
You can't own a property if you're not 18 in this country. So yes, you'd have to wait until you're 18. So
Hold on to that deposit. Make it a little bit.
100% great mum and dad are there. Stash it away and book me in 2 years' time to come for have a chat.
Yeah. Does your calendar open that far?
No, I'll have to start. Yeah, what's that? 2024. Wow, that's a bit scary, isn't it?
We've got someone here wanting your details. I'm sure that if we can find out who that is through our Facebook, David, and we'll get in touch with them.
Yeah, fantastic. Sounds good.
Yeah, okay, perfect. Yeah, so obviously you can get deals if you're wanting someone to get into property and you are a bit younger. Let's say you're 18, okay?
Yep.
So you're of 18 years old and your parents said that you could use their equity.
Yes.
Can you do that at 18?
Yeah, definitely. If you've got the ability, if you've got the income to be able to support the loan. So obviously, as I said before, there's two really important aspects to finance. One is, your deposit or your cash, your equity. Where's your contribution coming from? And secondly, what's your income going to support from a borrowing perspective? So it doesn't matter if you're 18 or you're 80. If you've got a good income and you've got the deposit and contribution ready to go, there should be a solution for you out there.
Exactly. Okay, perfect. So, look, I think we'll wrap it up there, David, and we'll get ready for the Sherp. That's in about 20 minutes from now. So I will see you in the Sherp this afternoon. And thank you, everyone, for coming and freedom fighters, and keep on fighting.
Fantastic. Thanks, Stacey.
Okay, thank you.
Thanks, guys.
Bye.